Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A third bearish black crow yesterday, and a more than suitable follow-on lower to the previous session's interesting key reversal down. The market continues to explore its surroundings and has decided to explore the downside further. Prices went and closed below the interesting 61.8% Fibonacci line of the 2014-2016 move at 81.86, as well as last week's low at 80.61. This move down has the lowest low and low close since January this year. A little below, we will now start seeing the beginning of some good-looking supports. They are the 50% Fibonacci line of the April 2021 to March 2022 move at 77.54, the April 2019 high at 75.58, the May 2019 high at 73.38, the September 2019 high at 71.99, and the 2020 high overall at 71.75. Now, importantly, as I've repeated for quite a bit now, we are still well within both the bear channels. I've previously spoken a lot and repeated it a lot about the twin bear channel idea I had for this market. We had a late July to date bear channel, currently at 71.53 to 88.87. The upper bear channel line had previously been broken but has repaired itself. This is the smaller of the two bear channels. We also have a second larger bear channel idea. Both the bear channels have the same lower bear channel line, currently at 71.53. Originating from early August, but the second larger bear channel utilizes the March to date downtrend, currently at 10012. There is one other item, a bit of an elephant in the room really, and one I've previously mentioned many times. It is the November monthly key reversal down. This has been what's been happening recently has been a good starting gun for the current move lower, so it's well worth taking that into consideration. So far today, a higher open, but the beginnings of a resumption of the move lower, down towards the highlighted 50% Fibonacci line at 77.54, and shying away from it at the last moment. I'm wondering if this market has a bottle to try further down. There's certainly enough ammunition accumulated over here to give it a try. Spot gold. An indecisive spinning top yesterday that I suppose could also be seen as a small bullish harami. This was not the response that I am sure many would have expected after the previous session's interesting key reversal down and second bearish black crow yesterday, coming as it did, I suppose following on from the earlier hanging man pattern. The market made hardly any attempt lower, stopped by all things the short moving average, currently at 1764. This was the second session we had seen this surprising support kick in. Meanwhile, the market had also made an attempt higher through the congestion at 1771 and up to what was the formidable congestion band between 1779 to 1788, where it stalled after piercing it ever so slightly before coming back down and closing on the 1771 congestion. In the big picture, we still have overhead target X2 in the 1815 area. This is for the primary target topside for the late September to early November triple bottom. The secondary hard to reach target X3 is higher up in the 1862 area. These recent actions appear to have withdrawn what was an earlier vindication of the large monthly key reversal up we saw in November. Yet, if we consider this, let's be honest here, if we consider this, the weak-looking short-moving average has managed to stop a further decline. What does that teach us? Does it mean that possibly the bullish incentive is still there, hidden, and the market's trying to smoke out the bears with this move down? This hasn't really gone lower when all indications were that it might do. All of what I've just said is worth considering. Now, so far today, a small move higher over the congestion at 1771, but not as yet willing to tackle the, shall I still call it formidable? Yeah, probably. The formidable congestion band between 1779 and 1788. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.